Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Thomas Cryan. How are you doing today, Thomas?
Very good, Kirk. How are you, sir?
Doing well, doing well. Glad to have you in the show here. For those listeners who don't know who you are, maybe you could tell us a bit about yourself and your background.
Sure. Uh, I'm a writer, an attorney, an entrepreneur. What happened, Kirk, is that back in my law school days at the University of Miami, I um, I ended up being appointed a staff writer in the Law and Economics Center, and um, I was assigned to an economist by the name of Dr. Roger Leroy Miller, and Miller really opened my eyes to many of the hidden sides, many of the hidden effects of laws on our society and on the culture in general. And you could think of Miller as an early iteration of Freakonomics, and and based on that, I became fascinated in the subject matter. Based on that, I spent a lot of time not only writing his books and academic articles, but then I started writing my own articles. And as a as I started the profession, I was a visiting professor in a small Catholic university for a year, practiced law for a year, and then I went out entrepreneurially. I started my own little media firm in the small market radio business, and so that's how I started. But during all of those periods, I wrote and continued to advance a lot of these ideas around law and economics, focused on the tax system. And what happened, Kurt, is during the pandemic, all those ideas came together, and I wrote this book, Disrupting Taxes, that's out now, knowing that the Tax Cut and Jobs Act was going to expire at the end of 2025, knowing that um, there'd be a big discussion around taxes at this moment, and hoping to be a part of that discussion.
Yeah, and that's one of the reasons I want to have you on the show is because, we've got that big discussion coming up, and frankly, there's a lot of interesting stuff, and I like innovation. I like thinking outside the box. I like interesting stuff. So when I hear Trump talking about tariffs, everyone freaks out. Now, I have a background in economics as well, so I, understand the history. Everyone freaks out and says, "Oh my God, it's going to destroy the world. It's the worst thing." And but when Trump was on Joe Rogan's show, he mentioned something in passing which I hadn't stopped to think about, which was, if you look back in history, we used to use tariffs and it was perfectly acceptable. Everybody did. And and it sounded like he had a plan but wasn't willing to share it. Now, I'm curious, have you ever looked into like the history of tariffs, how they've worked in the past, and before we get into some of your kind of theories on disrupting taxes, but have you ever looked into tariffs?
Sure, sure. It's sort of interesting if you go back to the time of the founding fathers. Um, what happened is after the Declaration of Independence, we had the Articles of Confederation. And under the Articles of Confederation, there was a lot of confusion about taxes. And that confusion, um, specifically the confusion around could the federal government tax individuals directly, or did it have to be apportioned to the states? And that confusion caused the Articles of Confederation to fail. And then there was a convention around the Constitution. And again, the Constitution was a big discussion around taxes. And again, they couldn't really come to any conclusion. And as a result, when the nation was founded, for the first 70 years of the nation, tariffs were the only form of revenue, really significant revenue for the federal government. As a result, if you look back in history, one, they were collectible, meaning technology was very rudimentary at the time, pencil and paper. Where were you going to collect the taxes? What you could do is you could go to the port, you could go to the harbor, and you could collect the tax. So tariffs were part it all the way up until the Civil War, and it was only the pressures, the financial pressures of the Civil War, that put Lincoln in such a box that he turned around and said, "Hey, we got to have a revenue act and have our first income tax." However, when Lincoln did that, the Revenue Act of 1861 and 1862, they were found to be unconstitutional. And hence, the short version is there was lots of jockeying in the courts. You really couldn't collect income tax. To remedy the situation, by 1913, they passed the 16th Amendment and said, hey, you can have income tax. So, with respect to historical reference, for sure, tariffs have been out there. But I also think tariffs have they do have their problems in today's world. So, one, in my view, the wider the tax base, the lower the tax rate, the fairer it is when it's directly no exemptions, everybody pays. The problem is the tax base for tariffs is only about 3.5 up to maybe a maximum $4 trillion, and so that would be one of the issues that I would say, hey, what are we really thinking through here? That's a very narrow tax base.
So what are they now? So you said 3.5 and 4 billion tax base for
No,
tariffs. What are
trillion,
income?
three and a
Trillion,
half
yeah,
to
yeah.
4 trillion. Yeah,
Yeah,
yeah.
but what's the tax base for income tax?
So the tax base for income tax is this, and it's really interesting. So when you talk about income tax, what's really fascinating, if you step back for a moment, if you step back, if you were to walk down the street and you were to go into a restaurant and talk to a restaurant employee and said, hey, there's two buckets of revenue in today's world. Those buckets are taxes on salaries and income and taxes on corporate profits. And you said that makes up 100%. Okay, how do those break down? What you would find is, my guess is anecdotally, that worker would say, let me think about that for a minute. And they'd say, oh, maybe corporations 50, 60, 70%. And the shock is, though you are probably very familiar with this, you and your team and your audience, corporations only pay 10% of the federal revenue. And individuals and their taxes on salaries and income pay 90%. So it's a huge burden on that 90%. And that 90%, when you talk about salaries, it's only about 12.5 to $13 trillion a year. So, and I know you have a much deeper sense of GDP than I do, but if you think of GDP at 28, 29 trillion, salaries are about 13 trillion. So the base is too small. And even I would argue, as we'll discuss, the GDP is too small. But that's sort of where we're at. And I do think that those tariffs they do become a burden on those with less disposable income, typically speaking.
Yeah, yeah, and I know there's obviously always been a lot of disagreement whether flat tax or progressive tax or all these different system, which one is better. And yeah, I mean that's why you have discussions, right? Is you
Right,
have these
right,
debates so people can talk about it. I mean, we
right.
discussion has been shut down for the last like 12 years, and now we can actually hopefully have discussion again. Maybe not, I don't know, but
Oh,
have a
hopefully though,
logical
hopefully
argument.
though. Yeah. I mean, and the truth is, when you really think about the current tax system, in my worldview, there's an inherent problem in the self-declaratory tax filings for individuals and corporations. So that very issue, raises, the potential for abuse. And if you can eliminate self-declaratory discretionary tax filings, meaning you declare what you owe the government, you're going to, I think, have a more efficient system. And certainly even Plato, 2,500 years ago, said, hey, when you have an income tax, the just man will pay more and the unjust man will pay less on the same amount of income. So this is an issue that society has been dealing with for a long, long time, without a doubt. And I think that there are better ways with technology to run the railroad.
So what do you think should be done differently? Because I mean, we have our existing system. You have um, the Jobs Act, the Tax Cut Jobs Act is going to expire soon, and they're talking about extending it. What do you think should be done differently? Like, what are we doing the right thing now? Like, should we be looking at other systems? Like, what's in your opinion the best way to go about it?
Yeah, in my view, we should absolutely be looking to one, use technology, and two, look for a far more equitable and a far more um, uh, uh, transparent system. So, in my in my book, Disrupting Taxes, the proposal is this: if you can have a 1% automated banking transaction tax on every banking transaction in the economy, and in turn do away with the IRS, eliminate the IRS. What happens is you can automatically collect revenue. There's no discretion. Everybody pays. Nobody gets exempt. And when I say everybody, we're talking not only the rich and the poor, not only corporations, nonprofits, but also criminals, visitors, everybody pays. And so at 1%, when the base is very wide and the rate is very low, there's less chance of people trying to abuse it. And economists have estimated that within the US economy, separate from the stock market, there's about $600 trillion of banking transactions. And if there are $600 trillion of banking transactions and you did a 1% tax, where you did a 0.5% on the debit and a 0.5% on the credit side, 1% for each transaction, you could collect, in this instance, you could collect $6 trillion and you'd balance the budget and you'd pay down the debt. But let me tell you, Kirk, what's really magical about this type of an automated system is you could take all the politics out of the collection of taxes and leave the politics only on the spending side. So whatever the decisions, so the automated banking transaction tax is in effect politically neutral. So what you could do is you could create this system where you match the percentage of the rate of taxation collection and you match it to the budget and the revenue spent, so you would have a balanced budget every year. And we're just in a minor tweaking of the 1%, up or down a little bit, depending on how the revenues would come in.
Well, I could see how that could be a problem because they could just tweak it up to 2 and 3% and higher because they're not dealing with the expense side. I mean, they are. Trump is talking about dealing on the expense side, which is great. I think we've needed that for decades. But of course, he's in there for 4 years, and the next person comes in and says, "All right, we're going to just spend like drunken sailors again," and then so
Right, right. But you
so
could pass a law. You could pass a law that made it match the spending side, so that whatever the political party controls the spending, you just make it so that it balances the budget. The other thing that you could do in this interim, as you know, and everybody has a little different opinion on the national debt, but 36 trillion and counting, we need to be paying down on that debt. And historically, there have been years where we did pay down on the debt. And so we're now at this very high rate of debt at 120% of GDP, and it's unsustainable. And you could use this as a system to begin to pay down in an efficient way. That's another element to it.
I like the idea. Anything that could be, I'm not sure if they'll ever get paid down. That's not their intent. I don't, I'm not
Right,
sure we
right,
could
right.
actually do that, but I like the idea. So explain to me. So you said banking transactions. So what would be some examples of banking transactions?
So every banking transaction, but in a very fundamental way, because part of it, part of this problem is, Kirk, in my mind, is that we've shifted this huge burden onto the middle class and the upper middle class. As you guys, as your team have articulated, the guys who are making 150,000, 250,000, 450,000, $1 million a year, those are the guys who are carrying the water and paying the vast majority of taxes. And so this would distribute it completely across the economy. So if you were a manager at Walmart and you made $100,000 a year. When Walmart pays you that 100,000, 1% would be taken off and sent to the treasury. When you, as that $100,000 salary, you now spend that on your family. As you spend that 100,000, 1% would be taken out. And so in effect, what would go on is that you would have spent in that instance 2% of your taxes, right? So it's a very much how shall I say this? Maybe it's best to quote Adam Smith. So Adam Smith said, "Hey, in a tax system, there are four elements that should be in the Wealth of Nations, which the founding fathers, as you know, read. There are four elements that should be there. One, all taxes should be proportional. What does proportional mean? Proportional means the same rate for everybody. Two, taxes have to be predictable. As you know very well, you guys often talk about markets love certainty and predictability. Three, has to be easy for the guy to pay. This is easy to pay. The bank, the bank it's just a transaction tax as if it were a small commission, less, it's 1%. And it has to be easy to collect for the government. Technology can do all of that. We have all this technology at our disposal, and we're not using it in a way that could free up. Think about the freeing up of all of the time, money, and effort we spend on filing our tax returns individually and corporately. It's a big burden. So there are many elements to it.
So, all right. So really what this comes down to is approximately 2% of your income would be taxed, which is a heck
Correct.
of a lot lower than we're paying now. Um, Now, what about I'm trying to think of some like carve outs here because there are some businesses where there's a lot of transactions. I mean, for instance, banks, they do lots of transactions. Some businesses do tons of small transactions. I guess the size doesn't matter, but they're doing a lot of them. So I'm trying to think of one offhand that would be a lot of turnover, but like how does that how does that impact? Because you're talking about, in some ways, it's a VAT tax, right? Because, the VAT is like a piece of every part of every transaction. So you've got the supplier paying 1%, you've got the transport paying 1%, you've got this person, you got this person. So like the 50 different pieces, you carve it out and you're looking at like 10%, not 1%.
No, 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 you're right. That's true. The notion though, um, is maybe it's best said that um, you know, the fact, yes, there is the multiplier effect, but the bigger elements of the multiplier effect would be the stock market. So the stock market is siloed out. It's the only, the public exchanges are the only exchanges that are siloed out. But if, as you say is true, there are sometimes in the supply chain, there'll be several layers. And it is true that they will all pay. One argument from my end would be, look, this is going to be predictable and it's going to be something that you can rely on. And as a result, with that predictability, the free market system will seek its own water level and balance itself out. And even those that have several turnovers in the transaction, they would ultimately, in the big balance of the economy, would ultimately find the water level.
Well, why wouldn't you have the stock market? I mean, as I think about it, I mean, you're paying 20% tax on the gains anyway, and the losses you don't pay, but it gets more complicated. So why wouldn't you include the stock market?
So the answer to that is that, and again, it's important to say this is a conceptual idea. It actually goes all the way back to the time of Caesar, and we can talk about the history of this idea. But in today's technology-based iteration, you know, with all the high frequency traders out there, they would, I think, say, look, you can't do it. You would crush the market and crush its liquidity. You know, in disrupting taxes, the solution is here, we're going to build a Chinese wall. When you place money into a stock market fund of your own, your account, and then you trade. When you place it in, you pay the tax. And when you take it out of the market and return the money into the economy for your own use, you pay the tax. So the tax does get captured. What doesn't get captured is the high frequency trading on a daily basis, or maybe even monthly basis.
Yeah, I mean, I get what you're saying. I'm just thinking this through in real time. I think for average everyday investors, it wouldn't really matter, but there are some components to the stock market. I mean, it used to cost like 1% to do a trade,
Right, right,
40 years ago, and now it's free or quote unquote free.
right,
Um, and you have these people taking, a mill, a few mills from a trade,
right,
which is really,
right,
really small.
right.
Yeah, we don't want to go back to the percent because that would not be good. But yeah, but I love the idea. But I mean, what you're saying is there's 600 trillion of banking transactions, so you're looking at 6 trillion. I mean, that's still half of what we pull in from our income tax base.
Right, right. And well, no, 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 no. So, so the 6 trillion would be, think of it this way. I think the numbers for the last year, 2024, we spent roughly 6.7 trillion, and I think we collected 4.7 trillion. So we were 2 trillion short in the deficit. So this would, thinking the Doge is going to eliminate some expenses, 6 trillion would be enough to cover the budget and pay down on the debt in a theoretical framework. And with respect to the 600 trillion, for sure, for a big uh, study would have to be done with the help of the Fed. But to give you an idea, there was a recent Fed report last year. If you add it all up, they're estimating there's 1,500 trillion in transactions in the year. Uh, so, the economists who have estimated the 600 trillion, I think that's a pretty conservative number. And again, the what happens is you could ratchet up or down that percentage in a tenth of a percent or 20th of a percent up or down to match the spending as it might be. So, and to give you one final note, there was an article last year. J.P. Morgan Chase said that they alone process $8 trillion a day of transactions. So, you know, the math says, hey, okay, there's now we don't know if how much of that is international, is domestic. This would clearly be only in a domestic front.
Yeah, I mean, it's interesting, and then I'm thinking another thing comes to mind. So I like the fact that this is a self-balancing system. As I think of this, you're saying, well, if times are good, then that increases. And as inflation hits, that number increases along with inflation. So it's a balancing mechanism. The only issue I see is, well, what if we go into recession? Um, and I'm not saying this is the right thing, but this is typically what happens, or at least basic economics suggests. In a recession, the government uh, spends more money and fills in the gap, and then supposedly they pay it back during good times. But of course, that never happens. So,
Right, right.
do you include the government in this? Because I don't know how much of that 600 trillion is actually done by the government, and they are not paying taxes themselves. So, how does that work?
Yeah, I mean, again, all of this has to be done with great study. My own instinct is no exemptions, everyone. So if the government pays out a contract, for $100, a dollar is scraped out, and 50 cents on the debit side, 50 cents on the credit side, and that dollar goes back to the government. That would be, if you keep it pure, no exemptions, because it's the exemptions that get us in trouble. It's the exemptions and the manipulation, as you know so well, of the tax system to benefit certain sectors. And that's where the problem is on the collection side. Sort of the additional point there is, if we take all of the favoritism out of the collection side, we leave all the politics and what might be favoritism in the open debate on the spending side. And so, you know, it's much more in the sunshine to hear people talk about in Congress, we're going to spend this money to support this effort, than it is in the quiet, uh, you know, dark rooms where we give a tax benefit to this particular industry over here without anyone really even recognizing it. So that would be my first reaction to that. Though it's great study would have to be done for sure.
Yeah, no, of course. And I'm leaving out some of the detail because I realize this is conceptual. I love the concept, I have to say. Another thought comes to mind is you're you're removing the IRS, but now the banks are the IRS because the banks are basically the collection mechanism. Um, so one thought comes to mind is as technology is progressing and people are looking at cryptocurrencies, I think people in the libertarian world would love nothing more than to see banks just go away.
Right,
Um, and if you're substituting the banks for the IRS, effectively you're making banks permanent, a permanent part of the system, and you can't get rid of them no matter how poorly they're run. Um, so I would say that's an interesting thing to think about is how do you how do you incorporate the evolution of banking? Because right now we're going through a big potential shift, and I don't know where it goes. Maybe banks
right,
stay, but
right,
big
right.
potential shift. So how does that work?
Well, it's a valid point. So my own instinct is one on the crypto side, the and I don't know, I don't really know that much about crypto, but my instinct is in observing from afar is that though crypto was originally thought to be a currency, it really has evolved into being a commodity. I don't know. Maybe you would know better, but so I don't think you could get outside the tax system simply by buying a house for you know with a cryptocurrency. But I also think that though we do away with the IRS in principle, there would be some technological framework of the IRS that that would do the scraping of the 1% from the banking transactions, right? With the banks. So you're exactly right. It this assumes that banks are here to stay, and and it also assumes that the trend to a cashless society continues to move. There was even some recent data that currently less than 4% of American households are unbanked. So the unbanked become a very small number. And again, thinking about fairness and equity and using technology to its greatest degree, doing this across the entire economy, the upside is so great. And these are downside issues to manage and think about, but I think they can be managed.
Well, you raise an interesting point about the unbanked because as I'm thinking this through, the first thing that comes to mind is I'm going to go get myself a bunch of cash so I don't have to worry about paying that
Well,
1%. Why do
but
I
but
use credit cards anymore? I'll just go outside the system.
well, there's two notions, and there are some notions in economics, as you're aware, that when a tax becomes so low, it's not worth
Right.
trying to avoid. So the theory is the 1% becomes so low that it's not worth trying to avoid. The second theory is, in the dark economy, a drug dealer who deals in cash eventually has to get that money washed into the system to work for him. And so he's going to take that cash and he's going to buy a gas station, or he's going to buy a laundromat, or he's going to do something with it. And so that cash is at least gets captured in the dark market, at least half of the equation. So my instinct is that the rate is so low that the hassle of trying to avoid it is not worth the 1%.
I would agree
And
with
just
that. Yeah.
yeah, and just as a final note, it's sort of interesting. Uh, um, again, it's always taxes are always been about what's collectible. And one of the reasons we have the withholding today, interestingly enough, comes from, of all people, Milton Friedman. Friedman at the time was a young economist. And the reason why we have withholding is he had espoused the idea it was a way to reach out and collect taxes when they were difficult to collect and make everybody pay an estimated advance payment. So again, we're using technology to try and, take a step further beyond that old paradigm.
Yeah, no, I love the concept. I think this is probably one of the most innovative concepts I've heard around the tax code. And I think, fortunately, we have an administration that is um, open to ideas. I heard some people talking about the interaction with Trump and some of the administration around like the California wildfires, and they were just
Mm,
sitting around talking, and people are like, um, and they're like, "Well, I want to go back to my home." And they're like, "Well, you can't." And they're just like, "Why?" And they're like, "We just can't." Like,
right,
well, how about you go back
right,
tomorrow? Like, and Trump just basically said, let's do it. Like, let's send him
right,
back. Like, it's kind of like it's looking at the government absurdities that we all have that have been built into the system for
right,
decades, and just
right,
saying, why can't we do this? So I love
right.
this conceptually. Um, what are areas you think that this is weak or needs to be worked out? Because obviously this is a big change. If this were to ever be implemented, and you have an administration who would consider it. Whether they do it or not is a totally different question. But
Right, 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 right. So I think there are a couple of elements, and these are it's a very interesting set of points you raise. One is we have to do with the help of the Fed and their data, which we don't have complete access to. We need to have a big governmental, study of this and how to undertake it. Number two, we have to we have to develop a transition, some type of a transitory period. How do we go from all of us filing our tax returns to no longer filing tax returns? And I think there's probably some kind of a transition that you could undertake where you you did, say, instead of a 1% tax, you did a 0.5% tax, and everybody's tax rates were all cut in half, and you sort of had a 3-year transition period. So that's one thing that has to be addressed, is how would you do the transition? And then I think, uh, you know, then you take that plus what is really um, the data out of the Fed, and you can do a mathematical calculation where you can, with precision, develop a tax rate somewhere around 1% that you can start to match to the spending side of a budget. And so those are, to me, are the three big ones.
yeah, that makes a lot of sense. So one other thing that kind of comes to mind is a lot of taxes. I mean, taxes in general are obviously used to pay for a lot of things. But one of the things that it's also been meant to do is to influence behavior. So if you want to influence a certain type of behavior, you set up the tax system around that. One of them is real estate. We want people to be homeowners. We want people to invest in real estate. So the tax code is very preferential to people who own real estate. And so if that's the case, then, or if you want to incentivize people to start businesses, you give them a lot of tax benefits. So what happens if all of that changes and you no longer have the ability to incentivize certain behaviors through tax?
Yeah, no, well, again, it's a powerful point. And coming from a free market perspective, the argument would be, look, if you have an unshackled free market where the laws of supply and demand will find their own equilibrium for all elements, all goods and all services, whether it's a house, an office building, or a car, whatever it is, the argument would be, and I would be, as a free market guy, espouse this, that the market will find its own equilibrium, and that yes, you know, I would even argue philosophically, the government shouldn't be in the business of um, trying to modify behavior. But that's a larger free market libertarian question.
I'm with you. But I also look at it as being largely disruptive too, because we've incentivized people to buy real estate through many means, investing and otherwise,
Right,
and all
right,
of a sudden that goes away, and then and all these like if I think about all the cool tax structures out there, you got
right,
real estate, one of the
right.
best.
One
You've
of the
got
best.
you've got oil and gas, right? Also
Also
another
one of the best.
really one of the best. Um,
You got
and
you got ownership of sports franchises. One of the best. One of the best tax incentives going.
yeah, yeah. Well, it's basically they just give you free money to build stuff, and you make all the profits.
But and not only that, you get to accelerate depreciation your entire purchase price.
Yeah.
So if you have another business on the over on the left-hand side, that business will never pay a dollar in tax with hundreds of millions of dollars of profit.
Yep.
You know,
Yeah. I
so
mean,
there are lots of incentives out there. You're right.
yeah, so and I'm not suggesting they're all good incentives, right?
Right, 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 right,
But what I do find is um any sort of structure that has changed causes massive changes in behavior and is largely disruptive. So take for instance, I think it was in the 90s. So when I took my Series 7 test to
mm,
become an advisor or broker in
mm.
99, they still had on the test the limited partnership tax code. They hadn't changed it.
Oh
They're like
wow,
gotten rid of it like 10
wow.
years earlier. I
Right,
still had to know this stuff and it wouldn't didn't even apply anymore. It was so dumb. But
right,
anyway, so I got to learn about this cool thing in the 90s where basically everyone changed their corporation to like a limited partnership because the
right,
tax benefits were enormous.
right,
And
right,
all of a sudden they just got rid of it and everything changed again. And so everyone went back. So and I get obviously people are trying to go do the best thing they can. But I wonder what are the unintended consequences that could happen from something like this? Like, I'm looking at this and I'm not seeing much bad stuff. I think it's all generally good. I think everyone across the board, except for I think poor people pay nothing, so they'll probably have to pay a little bit. But if you account for the fact that basically like 3% of the public pays for like 90% of the
right,
taxes, then
right,
it's
right, right,
it's really
right,
inconsequential. But in general, um, across the board, everyone benefits, including corporations, I think,
right,
because they're, one of the challenges they have to compete internationally,
right.
which actually brings up another point, which is um, my initial thought about tariffs
Mm,
were it's an interesting thought process of how we could implement tariffs. Now, I know Trump is using it as a mallet he can beat people
hmm
with,
hmm
um, and I'm sure he's willing to accept the tariffs. However, he like I said, he made that comment on the Rogan show about tariffs, which I thought was like maybe he has a bigger plan in place that he's thinking about. But then I started to think about it and I realized that's not really practical because we can't be the whole only country in the world that has tariffs and nobody else does. Everyone else has corporate tax. I almost feel like there has to be a global system implemented or else you have a huge discrepancy across the board that I know it balances itself out, but um, you're gonna have mayhem globally, which I don't think is good, economically if every country's trying to, they're doing their thing and they're losing out against us. It's just not good for like global harmony at some level. Like we don't need a World War III because of our tax policy, you know what I mean?
right. Mm.
So I'm thinking this through out loud, but I wonder how that would work globally if we had our system and everyone else had their own system. Like how would that work? And does
Yeah.
this tax include international transactions?
Only on only the part of the transaction that occurs within the borders of the United States. So again, those are very powerful and interesting uh, points. I think that you know we have to remember a few things. Number one, We have 20% of the world's GDP and 20% of the world's money supply, and we have 5% of the world's population. So the math tells you we need to be doing some things outside our borders to make that happen to some degree. And I am not, I'm with you. I'm not sure what, um, what the tariff repercussions are, but as a free market guy, you know, I, I believe, there's, fundamentally there shouldn't be tariffs, but as you and your audience knows very well, the problem is that there are certain countries, China would be a great example, that underwrite uh, the steel industry, and hence they're dumping on the market in a less than a supply and demand pricing equation. So how do you manage that? I, in an ideal world, and I have to meditate on it and get back to you, but my first instinct would be that if we did this system, eventually the whole world might go on this system, and
Yeah.
and it would just become very efficient. I mean, the power of the technology alone, if you think about it, is so dynamic that it becomes so efficient that you know everybody everybody gets the benefit of the technology. So, I, again, big study. Those are great questions, Kurt. But I think they can all be answered, and I think that in time, if you, as I believe in the free market, I believe the laws of supply and demand will ultimately reach an equilibrium.
No, I totally agree with that. I mean, yeah, I totally agree. Not that we have free markets, we haven't had them for a long
Yeah.
time, and I wish they would come back. Um, but I totally agree that that does balance itself out. I will ask one one question, and we'll wrap it up here. Is that's in the federal level. What about on the state or local level? How do people balance that out? Because right now they're having a different tax system than the federal government, right? Or if you change this, you'd have one which is transactions, but then you've got state and local governments that have to, they've got to fill their coffers as well. So how does that work?
Right. Well, my the first instinct would be the states are going to do what they're going to do, and the Fed, just as the Fed does now. Though, as you say, there's that interrelationship for deductions based on local state taxes. My own instinct is that, again, you know, one of the profound elements of disrupting taxes is this notion that the wider the tax base, the lower the rate, the fairer it is for everybody. What states end up doing, as you articulated with a form of a sales tax or a VAT, the problem is the base is too narrow, so the tax becomes too high. So maybe the tax is 6% of certain goods, 7% of certain goods, and so you know and they're not taxing other goods, and they're not taxing services. And then, as you know, many states have a little bit of an income tax, but many don't. So I think that at this stage, it would maintain the same equilibrium between the states and the Fed as now exists, other than, that what states I think will find is that states may find, hey, there's maybe some benefit to this type of a technology-based transaction tax for those states that are high income tax. They might look to seek to change themselves, but that would be my first reaction there.
Yeah, that makes sense. Yeah, that
Yeah.
makes sense. Yeah. Well, cool. Well, Thomas, I really appreciate you coming on the show and sharing your wisdom with us. Love the idea. Love to see this out there more. We'll obviously do our part to help you in that. Where can people find more about you and your book?
Hey, first of all, it's been great to have a conversation. You and your team have been great. And for me, you can catch all of us at disruptingtaxes.org. We'd love to hear from anybody. We love and appreciate advancing the concepts, and look forward to the discussions in the future.
Awesome. Well, once again, thanks for coming on the show, and we'll have you back on in the future.
That'll be great. Thanks a million.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is, The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Thomas. Really appreciate him coming on the show. Now we're into the panel portion of the show where we have our very own Barb Friedberg. Hey, Barb.
Hi, Kirk. Hi, Jeff. Happy to be here.
Glad to have you. And we also have our very own Jeff Hewlett. Hey, Jeff.
Hey, Kirk, Barb, great to see you guys.
Yeah, well, let's just dive right in. So, Barb, what were some of your thoughts from the interview?
I thought it was kind of mind-bending. I really had to think about how this would actually work. And one of my thoughts was, how do you avoid having the same dollar taxed like multiple times, more than twice? That was one thing that I kind of couldn't get my mind around, and I'd like to chat about that more. And then, of course, impact on the poor. So those are my two questions, really major questions about the conversation, and I'm sure we'll get into those.
Yeah, we'll definitely get into them. And for reference, you don't. You tax it multiple times. You tax it every transaction. So if it goes through multiple, it does multiple times. So, but we'll get into that. Jeff, what were some of your takeaways?
Yeah, so first of all, I love the history discussion, right? I hadn't really thought that much about it. I kind of take the tax system as it is today, but I think as always, when you kind of track back, to the revolution and then ultimately to when the income tax was put in 70 years after, it's I don't know. I really enjoyed that, and it got my brain thinking on how do we get to certain places, and kind of like the whole idea, like he was talking about, tariffs originally were funding the government. Why? Because we had the technology to be able to implement a tariff, because people came to the shore, they got off the boat, you charged them money, right? You had gates there. Well, that was the technology today. We have much better technology today, right? So, why don't we think beyond this? So that's kind of where my head went. And then, of course, my head went to also, I do believe the income tax as it is today, with its complexity, as well as really, it's focused on the people that have the highest income, but not necessarily the highest wealth, right? You can believe that Elon Musk does not pay much income tax, right? I think he's very proud of that. Why? Because he's not a wage earner. So anyway, so all those things kind of go to my mind is, okay, if that's not really working, if we're not really taxing wealthy people, or should we be taxing wealthy people, then what's the alternative? I liked his thinking mainly because it's different thinking. I don't know if that's the answer, kind of like what Barb was saying. You can kind of think of all the reasons why it's probably not a great idea. But also, I just love it that it's new thinking, it's relevant, and hopefully will spark a conversation about what's the right answer.
Yeah, I agree, and I think what's interesting, and when people think about the income tax, people get uncomfortable about changing. They want to lower their taxes because no one wants to pay more. And for those of you who think we should tax the rich more, maybe you should pay more too, right? I mean, it's not about other people. I think the challenge I see is we have a system that has been created over many, many decades, and for better or worse, you might not agree with the system, you might not like the system, but the system is designed for multiple reasons. One of the reasons is it's meant to incentivize behavior. So the reason that real estate has some of the best tax treatment is because we're incentivizing people to own real estate. So, if you don't want people to own real estate, you get rid of all the tax benefits, right? But nobody's doing that because they don't want to disincentivize people to own real estate. Same thing with oil and gas. They're incentivized to drill because you get good tax incentives. Now, of course, you can make money, you can lose money, but the tax incentives are great. So our government has become very good at incentivizing the behavior they want of the citizens, right? And I don't object to that. I think that's actually a good thing. I think they should do that. So if you look at our system, it's clearly broken. It started off with let's just tax the rich and the 1%. And of course, over time, everyone's taxed. Now everyone's taxed. I think the challenge with the tariffs mainly is that we don't have a global tariff system. We have some, but we have a global income tax system. Like virtually every country taxes income, right? Um, so when you have every other country taxing income, they don't have to institute tariffs. Tariffs are more of a way to balance the playing field. It's not meant to generate taxes so much as it is to balance the playing field. And so when you have one country that is doing tariffs and everyone else is, and not income tax, everyone else is doing income, um, it creates a problem, which in of itself, the problem is the fact that no one else is doing it. It doesn't mean it's a good or bad idea. The bad idea is the fact that you're creating problems that shouldn't have to exist. And so the thing that I like about what Thomas came up with, and I don't know if it makes sense or not. I haven't looked through the numbers. Even he admits like, the devil's in the details, but I love his thinking. I love the fact that here's a guy who's thinking outside of the box. I think it was Steve Forbes came up with the idea of the flat tax. I think it was him, or he started to promote it anyway. Um, Interesting idea. I don't love it in implementation. A lot of people have gone through the weeds into the weeds in that, and I've looked at it and I don't love it. I love his thinking around it. I love the fact that he was thinking outside the box. I love the fact that he was willing to put himself out there for criticism. That's what we should all do. Come up with ideas, put some holes in it, and if it stands up, use it. If it doesn't stand up, then go on to the next idea. That's the whole point of innovation, right? Is you come up with new ideas and new ideas that are great, replace the old ideas. So I love the fact that we're thinking in this way, and I love the fact that he's coming up with this. I don't know if it makes sense. I mean, the numbers don't line up perfectly, but it's certainly better than what we have now, which is the system's kind of a mess. So, Barb, I know you mentioned some things in the intro about, how does it affect poor people, and that's a good criticism because I don't know yet. I'm thinking this through. I think it might, but what are some things people should be thinking about in ideas like this?
Well, like you and like Jeff, I love the idea that it's a unique idea. And the tax system is broken. Everyone will agree to it. But the problem is, if you fix the tax system in any way, you're talking about, especially if you simplify it, you're talking about major economic changes. The entire industry of tax preparers, of accountants, shrinks. That's a huge industry. So that's a disincentive to change the tax system. And I think that's a huge problem. And then you look at the IRS. The IRS would, be shrunk as well if the tax system were much simpler. So I think that's a yeah, which we
I'm
would all
clapping,
love, of course.
silent clapping.
But and I like the idea of thinking outside the box. We need to do something. I just finished my taxes and it's like, what do I have a 60-page tax return for? It's insane. And don't even get me started on the California tax return. But this proposal really hurts the poor because look, for those who are making 200, 300, 400,000 a year, okay, 1% when you get your income and then 1% when you pay your bills. Okay, that's gonna cut our individual taxes probably by 70%. I would guess, just ballpark. But think of the poor who are paying nothing. Let's say you're earning $50,000 a year, $40,000 a year, and you're married and you've got a couple of kids, and that's your household income. Well, you may pay, I'm not an accountant, but you may pay next to nothing in taxes now. And all of a sudden, every time you go to the grocery, the store, everything, you're paying an additional 1%. That matters. And I don't like any tax that is regressive that hurts the poor any more than they are already being hurt.
Yeah, I would agree with you, Barb. I think it's an important part. I mean, if you look at different tax systems, there's progressive tax, which is the rich more than the poor. There's equal tax, which everybody's the same, and then there's regressive, which hurts the poor more than the rich. Um, Different states have actually different. I think there's like one or two states that have regressive taxes, which is interesting. On the state level, I can't remember which ones, but I think there were one or two. Um, but I totally agree. However, if I understand his proposal, the poor would actually be paying less tax, generally speaking, because right now the poor still pay. I don't know if you have any kids who've tried to get a job, but they're still paying a lot in taxes. You know, it goes to different places. They're not paying 32, but they're definitely paying taxes. So like I said, this his proposal is lacking some detail. I think conceptually it's good, but I'd be very curious to see the data behind this proposal if it does impact the poor more, because the way I understand our conversation, everybody would be paying less.
Oh,
You
well,
know,
that, obviously I haven't studied the proposal and it merits a lot of study.
right.
But one question I have, and I want to throw this out to the both of you, because I was just thinking, let's say I buy a house. Let's say I buy a $500,000 house. I pay 1% tax on the purchase of that house. Then I take out a mortgage. I pay 1% tax on the purchase of that mortgage or the borrowing of that money every month. So I'm thinking there's something off about that,
Yeah.
because I bought the house, I paid the 1% tax, and then every month I'm paying 1% tax on my mortgage payment, my real estate taxes, my insurance.
Well, let's
That
walk
doesn't
let's
that
walk through it.
doesn't seem right.
No,
What did you
it does. Let's walk through it. So let's say you earn 100,000, right? That's your income, right? So you earn $100,000. Let's take the purchase of the home aside. Let's take your monthly. So you earn $100,000 and you're spending 80,000, right? Forget taxes because you're not getting income tax in this scenario. So you're spending 80,000. You have 20 that you're not spending. That 80,000, you're paying 1%. Let's just say 1% on that. Um, you're right now you're getting taxed 30 to 50% on your 100,000. So if you're paying 1% every month, this is money you're earning anyway that you would have been taxed at a much higher rate. So if you're spending it, you've already been taxed on it because you've been taxed at the income tax rate that your state is or your federal government is, which is inevitably higher. Um, so I think thinking through it, doesn't matter what you're spending on, you're paying 1% every month. Wow, that's a lot, but you're also getting 30% to 50% back. You're getting that 30 to 50,000 back that you can spend. So it's really not, you're not getting both. If they did both, I'd be against that. But the purchase of the house, I think, would be interesting to see how that works, because that would be a big disincentive to own real estate. Plus, if they get rid of income tax, they would get rid of the incentives for owning real estate. And I'm not sure I like that. So
Okay.
there are some big holes for sure.
And when I just did a quick mental math with a simple example, 2%, let's just say you pay,
Yeah,
just look
two.
at it as 2% and assume you're not saving, you're spending all your income. So you're paying 2% on your income, your income and spending combined. That jives with, say, before paying marginal tax rate of, say, 10%, 11%. How does that replace the income that the government is getting? He said, oh, you're taxing more, so it's going to bring in more. That doesn't compute if you look at it on an individual basis, does it? Or am I missing something?
So if I look at the numbers that he gave, and like I said, I haven't dove into the details. I'm just going on the numbers he gave. He said JP Morgan processes 8 trillion transactions a day. Um, you're looking at 600 trillion of banking transactions right now in a year. So 1% of that is 6 trillion in income that the government would get. And I think right now the income tax base, what did he say? I think he said 3 to 4 trillion, 3.5 to 4 trillion tax base for tariffs. Income tax base is 12 to 13. So the numbers don't line up perfectly, but if you said 2%, so at 1%, so 2% would be 12 trillion, right?
But let
So,
me ask you this, like I make a lot of transfers through my bank, transfer from my checking to say my savings to my checking, my investment account to my, back and forth all over to try and just manage the income and expenses that I spend each year. Is that going to get transferred is that going to get taxed every time? Let's say I transfer $1,000 from my savings to my checking. Am I going to have to pay 1% of that?
well, think of it differently, Barb. Yes, you would. However, think of it this way. People's behavior changes with the rules, right? So right now our behaviors are aligned with the tax system we have. We buy a lot of real estate because we get benefits from that, right? We like businesses because we get benefit from that. So people's behaviors align with the incentive. I make a ton of transactions every month in my banks because I can. It doesn't cost me anything. But if it cost me 1%, I would change my behaviors to align with that so I didn't pay more than 1%. So I think you have to think about the human nature angle of this, which is people are smart. They're going to do what's in their best interest, and if the system's different, the rules are different, they will adapt their behavior to the new rules. That's how all economics works, and I think that would hold true here. But I get your point. I mean, it would change a lot that we haven't thought about.
Yeah, yeah.
And businesses would
Well, let's
probably
think.
pay a lot more. Go ahead, Jeff.
Yeah, I was just going to say, and I love this line of thinking. Let's think about the multiplier, right? So like the simplest form is say I make $500,000 a year. If I take that income, money comes in to my bank, and then I either spend it or I put it into a long-term robo advisor or I invest it in real estate or whatever, every dollar of income is going to be attached to 2%, 1% in, 1% out, right? So really that's the minimum multiplier. Now, if you're the kind of person like me, I'm a big time set it and forget it. Like I invest long, right? I'm not a trader. I don't believe in day trading and all that stuff. So my multiplier will stay close to 2%. Maybe it'll be a little bit higher. Of course, I have to move money around here and there, but most of my money gets parked, right? And then it just goes into long-term investments. But for a trader, right, a day trader especially, it'll blow up that whole industry because every intraday trade they make, they're going to get squeezed 1%. So their multiplier could be 10% or something like that. But to your point, Kirk, they're going to change their behavior, and that's where my head goes to is what's it going to do to those kind of industries, right? Like the day trading industry, it'll probably destroy it, which isn't necessarily a bad thing, but it would certainly put a massive tax on it. It would discourage transactional behavior, which isn't a bad thing, in my opinion. So, but then the other thing I go to, and I think Barb, you hit on this before, like the poor, right? And I'm a banker. I've come from banking, and banking really focuses on something called the unbanked. And the unbanked in our country, there's about 10% of Americans, typically the poorest of Americans, that are unbanked. They do not have an account anywhere. They live cash and carry, which is harder to do in our world today. But that there is a group of unbanked people in our country that tend to be pretty, or are more poor. They wouldn't get touched by this. So in a way, the incentive is going to create is it's going to create incentives for more unbanked people in our country. I don't know if that's a bad thing. I think it is. I mean, I think the more people get comfortable with using our financial system, it generates wealth. But to me, that's the incentive side of it, right? Is that the incentive? Do we want to create incentives to not be engaged in our banking system?
It's
Well,
a
I
it,
just,
it
sorry, go. Are you
one
done?
quick point. Yeah, one quick point, and I can go back to you. So I will say this. So we did talk about this in the interview, in that if the tax is so low, people will not be disincentivized. I mean, 1 to 2% is not that high. I will say this about the poor: if you're unbanked, okay, and he mentioned 4%. I don't know what the real number is. I've never looked into it. So somewhere between 4 and 10%. If you're looking at that number, what you have to realize is poor people who are unbanked, many of them are still getting checks. And they'll go to check cashing places, which charge like, I don't know what they charge, is like 10 to 20%
Right.
to cash that check. And so if they're already taking 10, that's a tax. You can call it whatever you want. It's a tax on them on their pay to cash their check. So if you think about it that way, the unbanked are still paying a tax. And in many ways, it's probably much higher. It's like going to a
Right.
loan shark. You could go to a bank and pay 5%. You can go to a loan shark and pay 30%. Um, you don't go to a loan shark if you can go to a bank. And if you can't go to a bank, then you go wherever you can. And I think that's the problem with the poor, is if they're unbanked, there's probably a reason to it, and it's probably more complicated than this system is going to address. Um, but I agree with your point. I think if you make the taxes onerous, it becomes a cash society, which I don't think is a bad thing either. I think, we need to be able to do that. And if people want to exchange cash for business to evade the 1%, let them. I mean, behaviors will change. People will change incentives. I mean, Barb, as you said, you said, well, if I have to move money around, here's a quick fix, because I love different accounts because it helps me segment things. And of course, that would be expensive. House money for this, this for this. Um, I just create an app that does all that segmentation in one single account, and it tracks all those things, and you have one account so you don't have multiple transactions. I don't know that I'd
Right.
want to do that, but that's an idea. So I think all of this is the things we need to think about are what are the big problems? And the poor is certainly one of them. Like, I'm not minimizing this, but I think thinking about the big problems, because the small ones kind of take care of themselves. Like, people come up with solutions for that. And I'm sure we have a lot of smart people in this country, smarter than me, that'll come up with solutions. So I have no doubt that that would potentially be. Go ahead, Barb.
There's no doubt among any of us, and probably most of the people in the country, that we need a revision of our tax system because it's insane. But this proposal, if I'm running a small business, let's say I own a Subway, I would pay all my employees in cash. I would just avoid, I would incentivize my workers by saying, look, I'm going to pay you in cash. And that way you get tax-free income. And then they take that cash and they spend it, and it does not get taxed at all. And I can see that happening at scale. And all of a sudden, you have millions of small businesses that are avoiding paying any, their employees are avoiding paying any taxes. And then it also gets back to, well, let's say I don't bank. Let's say I do everything on PayPal, or I do everything through Venmo, or, whatever. You can avoid, like, I hire freelancers, I pay them through PayPal. Does that get included into the system, or is that just an ancillary way to forego taxes?
I think it would be included. I mean, if it's in the banking system, I think that's The 600 trillion is banking transactions. So I'm assuming, like I said, without getting into the weeds, I'm assuming it covers that. So yeah, I mean, you're right. I mean, and that was my point to him. And he said, well, if you have 1%, are people going to complain? I'm like, you're kind of right. You know, like, am I going to go through all the effort of paying people in cash, like just to avoid 1%? Maybe. I mean, I don't know. I mean, we'd find out, right? You know, you'd find out if you did the experiment. I think what would be interesting is I'd be fascinating to see if somebody tried this, like a small experiment, like one state or like a country tried this, like El Salvador. They went to the Bitcoin system, right? Like that's a good experiment. Like I don't know if it's the right thing to do, but I love the fact that people are experimenting. And I think what we need to be better at as a country is, and hopefully with a smaller government, we'll be more nimble. What I would love to see is more experimenting, small experiments with good ideas, right? I've heard a ton of great ideas over the years that couldn't be implemented at scale, but like if you took like a state or a town and they tried it, let's try it. Let's see what happens, right? I mean, Las Vegas didn't exist until somebody came out there and made it exist, right? It was an experiment and it's done wonderfully. I'm not sure I, agree with all the things behind it, but I think as an experiment, it's really interesting, right? You put a casino that nobody wanted casinos, put it in the middle of nowhere, and draws a lot of people, and you put all the bad stuff in one place. Okay, like I don't live there, so how am I to judge? Um, but I like the idea of experimenting with new ideas. I think we need it. I think we all get set in our ways of this is the best system. And you're going to hear academics getting on there. There is no better system. They're all trash. This is the only one. Like, you're an idiot. Like you're not thinking outside the box. Your whole life is derived off one system. Think outside the box. Come up with ideas. There's a lot of smart people in academia. Think outside the box. Come up with something new. And I hope we have more of that. I mean, our country is an innovative culture, and I would love to see that in government. We're seeing it now with Doge. Some people don't like it. Most people do, because they voted for it. So most people like it. But we'll see. I mean, it's like we're seeing an experiment happen in real time. Let's see what happens. Maybe it's a good thing. Maybe it's not. I don't know. But I'm not going to change it with my opinions. So I think we all kind of riding along and watching. But anyway, so what are your thoughts, Jeff? I mean, where do you think we go from here? And we could probably wrap it up in the next few minutes. But um, any kind of final thoughts on this?
Yeah. So my brain goes to another place, like in the concern around, like, is it a proportional tax? Is it a regressive tax? Does it, unfairly hurt poor people or hurt poor people more than we like or not like? Those things are all manageable. There's things called tax credits, right? I mean, I wouldn't get too bent out of shape about, whether something is technically regressive or not. Like take for example the sales tax. Sales tax is regressive. If a poor person buys a quart of milk, it costs them proportionally more than it costs you, Kirk, for example, or me. So that's, we already have regressive taxes. So, but we manage that through different outlays, through tax credits. So I don't get too worked up about that, because I do feel like, and kind of to Barb's point, like in the narrow sense, it may hurt poor people a little bit more. But I think we always find ways to take care of our poor in this country, maybe sometimes better than other times, but there are mechanisms to do that. So from that standpoint, I don't get too terribly worked up about it. To your point, I don't know if it's the right thing. I'm just really curious and interested. I haven't picked up his book. I am going to pick up his book just because it's, this is sort of thing that I love. I love the thinking. So anyway, thanks for bringing it to the attention.
Yeah, Barb, final thoughts, and where can people find more about you?
I love thinking outside the box. And I was just listening to a podcast where someone was saying that all of our systems are built on the past, on what we know about the past, and everything changes going forward. And so we really have to train ourselves to think creatively in the moment, in the time that we're living in now, because we are not living in 2000 to 2010. We're definitely not living in the 1980s. Although sometimes I feel like I am, but that's a story for another podcast. So, kudos to thinking about new things, about trying to improve the tax system, which definitely needs improving. I'm Barbara Friedberg. You can find me on YouTube and at Barbara Friedberg Personal Finance, and I will see you next time.
Great. Thanks, Barb. And I love the 80s. Great music, so I wouldn't mind reliving that. Jeff, final where can people find more about you and final thoughts?
So I lead Personal Finance Reimagined, a financial education, decision-making financial education platform. We're all about helping people create a consistent, repeatable decision process for a lifetime of wealth and health. So find me at Finance Revamp for sure. And I also teach. So anyway, but yeah, I love what you're doing, Kirk, and I look forward to our next podcast.
Awesome. Well, glad to have you both on. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.